Everyone's talking about what's going to happen with rates again, right? I mean, are we going to see a cut, right? 50 basis points in July or September. All of a
Yeah.
sudden, this comes back again. It's surfacing. This loosens up the Treasury market a little
Yeah.
bit.
Yep.
And that's such an important thing because this market, I'm not trading this market every day. And I'm not trading this market when the S&P is more rangy and more trendy
Hmm.
because that's the better market for me because I like direction. When this market gets a little loose, I like it a lot. I like it on data points. I like it when the S&P and NASDAQ get really busy. And I like when there's a lot of uncertainty with rates. That's when the Treasury market, for me as a day trader, is the best. I'm not really swing trading this market. I mean, every once in a while I'll have a swing, but it's very rarely. It's mostly day trades because in this market, this to me is a true scalper's market. And the reason is because the range is more predictable. Here's the trades I did today. The range is more predictable and I can lean with size in an area I really like. There's not really a lot right now that I love about any specific prices. I'm just looking for squeezes and I'm trading anywhere between 2 to 10 lots on it. And and I'll just click in 1 to 5 at a time to
Hmm.
try and get in. Let me go back to this chart because when I look at the 10-year right now, pretty much flat 5 day, pretty much flat Bollinger Bands, a little bit of range expansion possibility, but look at where we are. We're like just stuck, very similar to almost what we were in not too long ago in S&P and NASDAQ. We were kind of just like, kind of our little rotation off a rally. And so it's a two-way tape to me. It's not really clear directionally higher, which would be lower rates if everybody doesn't understand how the Treasury market works. And if it goes lower, it's higher rates. And so maybe you favor the longs a little bit just because the rate cuts with a really fierce sell-off in NASDAQ and S&P that it's hard for this market to really collapse because if we're going to get ugly in equities, you might see some people step in and buy the bond market because if they're going to cut rates early, it's probably not a really good sign. It's not going to be because inflation's under control. It's because there's something wrong, right? And the
Right.
Fed is going to say, hey, we're cutting 25, 50 basis points now because we see something you don't. I mean, that's ultimately what the story plot would be. And that's the way the equity market and the bond market would take it. And so you maybe favor longs a little bit. And so that's just my mindset coming into the day because I know I have to wait for shorts and setups in S&P and NASDAQ. I'm not bottom beating because it's just too difficult. I know that the 10 years in a two-way tape, maybe I favor the longs a little bit. So my mindset is if I want a day trade, I want to scalp, I'll focus that energy there and I'll just look for squeezes. I'll look for a lot of buying on a rally, a lot of selling into a low that they can't advance and look for a rotation.